The Federal Reserve now has brand new leadership announcing our shadow, and every single retail investor wants to know what the actual plan is. Like, what are these central bankers honestly going to do to your money? Are they going to cut interest rates to please the politicians? Are they going to aggressively raise interest rates to save the dying bond market? Or are they just going to print trillions of new dollars like absolute crazy out of thin air? Like, how exactly are they going to handle this massive soaring inflation crisis without completely destroying your net worth? So the real situation is that Jerome Powell's turbulent term as chair of the Federal Reserve has officially come to an end, and as you probably know by now, President Trump did not get along well with Jay Powell at all. Trump openly and savagely called Powell an idiot. He called him a dummy. He called him an imbecile. And let me remind you, this was all completely in public. I mean, this was right in front of mainstream reporters on numerous chaotic occasions. Okay, so I just want you to know that the real reason why President Trump was acting like this towards Powell, especially right in front of the hungry media, was because Powell did not want to cut interest rates as quickly as President Trump wanted them to be cut. Trump desperately wanted to lower interest rates to give a massive short-term boost to the economy, to provide a massive spark to the labor markets. And of course, it would have been incredibly nice for his administration leading up to the critical midterm elections. But Powell did not want to cut interest rates at that time because he knew it would have drastically accelerated the already painful rate of consumer inflation. And what ended up happening back then is that President Trump repeatedly threatened to fire Jay Powell using multiple aggressive approaches on numerous public occasions. But it all ended up being a giant financial bluff because Powell successfully made it to the absolute end of his official term. So now Trump has officially selected Kevin Warsh to be the brand new leader of the Federal Reserve, to be the ultimate Fed chair. Warsh has incredibly close personal connections with the wealthy Trump family. Kevin Warsh is already personally worth an estimated down by million, and it is my direct expectation that Warsh is going to be worth well over 10 million. After this amazing opportunity to serve the elite American people as the new chair of the Federal Reserve. Okay, now here is the massive problem that I want to point out to you. Right now, President Trump has brought in Kevin Warsh to do two specific things as the new Fed chair. The first thing is to print trillions of new dollars to fund massive government deficits, and the second thing is to aggressively lower interest rates to keep the stock market pumped up. Now, can Kevin Warsh actually deliver on pleasing President Trump? Because, I mean, let's be totally honest with each other, that is the only reason why Kevin Warsh got this job over much more qualified economic candidates. But I just want to pose this hard-hitting question to you. How on earth can Fed Chair Warsh cut interest rates right now when the actual rate of inflation is soaring completely out of control? So let's look at the real rate of inflation announced in our shadow. Ever since the chaotic start of the global pandemic, the Federal Reserve has been desperately trying to get the rate of inflation down to their golden target of 5% for the past few years. So I have drawn a thick red line to illustrate exactly where 5% is at on the chart. And this is precisely why Jerome Powell got completely ridiculed by independent analysts, because he stood up there and said that this high-level inflation was just transitory. Like, sure, 6 years of transitory pain for the middle class. So when you take a look at the actual data in February, the official reported rate of inflation was sitting at 5% in March. It rose noticeably to 5%, and in April, it skyrocketed all the way to 5%. Now, I just want you to keep in mind that these are government-reported figures, so it is most likely wildly understated compared to what you pay for groceries and rent. But as you can plainly see, they have been jumping up pretty noticeably every single month. Now, I just want to say that I don't know about you, but it is my firm belief that this geopolitical war, which is creating a massive energy disruption and spiking global commodity inflation, is absolutely not going to end in the next few days. Therefore, the real price of crude oil and energy is going to continue to increase month after month, and that is going to make the underlying inflation situation significantly worse for everyday consumers. That is just my grounded belief based on the hard macroeconomic data, and in this toxic environment of higher and stickier inflation, can we really safely cut interest rates at this exact moment? Like, this is literally the worst possible time to even ask the central bank for an interest rate cut. Okay, with that being said, Tingur Iji Chuen, I think it is incredibly important to put yourself directly in the perspective, or like the shoes of Kevin Warsh, the brand new Fed chair. Because on one hand, if you are Kevin Warsh, the powerful guy that got you the job, President Trump, he is constantly demanding an immediate interest rate cut. So what do you realistically do in this nightmare situation? Because, based on basic mathematics, that you should absolutely not be cutting interest rates right now. So do you choose to not cut interest rates and then you are going to completely piss off President Trump, who literally gave you the job, and then Trump is most likely going to go after you with weaponized criminal probes and public threats, and then you are going to risk losing your once-in-a-lifetime opportunity to clear billions of dollars for your elite buddies? Or are you going to blindly listen to President Trump and you are going to cut interest rates for him when you really shouldn't be, so that you can make your personal billions of dollars and help your rich friends and family, while completely screwing over the purchasing power of the American people? Like, those are your two real options on Wall Street, but let's see what Kevin Warsh actually decides to do when the pressure turns up. Now, with that being said, I want to show you what the actual institutional market expectation is right now. This data is coming straight from the CME FedWatch tool, which doesn't care about political talking points. The next highly anticipated Federal Reserve meeting is going to be on June 6, downsetting RCDO. The institutional market expectation is that there is a massive chance that the Federal Reserve will not change the interest rate at that meeting. In other words, they are going to just maintain it exactly where it is right now. No rate cut and no rate raise. And there is a tiny chance that the Federal Reserve will actually raise interest rates by and a flat chance that the Federal Reserve will lower interest rates in June. So although President Trump desperately wants immediate rate cuts, the smart money in the market does not believe that he is going to get them in June. So it is going to be very interesting, in my opinion, to see what President Trump's aggressive reaction is going to be on social media. Okay, now you absolutely have to see this next part. The high-stakes meeting right after June is going to be on July RCDO. There is currently a nil chance that the interest rates are going to remain completely unchanged by that meeting, and there is a rising chance that the Federal Reserve will actually raise interest rates by by that meeting. So I would say, a chance. That is a highly meaningful probability for the market. Like, that is definitely not nothing. And there is a flat chance that the Federal Reserve cuts rates by the July meeting. So as a matter of fact, I want to take you all the way to the absolute end of the year. I want to show you the crucial December eating expectations. The institutional market is fully expecting that there is not going to be a single rate cut this year in the entire year of RCDO. So listen to me. I think that President Trump may have the short-term patience to hold his tongue for at least one meeting. I am talking about the upcoming June meeting if there is no rate cut. But if Kevin Warsh does not cut interest rates at all this year for the entirety of RCDO, I fully expect a bunch of massive public tantrums coming out of President Trump. Like, I am just being totally realistic with you about how Washington works. When I was back in RCE, I was working a soul-crushing corporate job making exactly a year. I remember looking at my bank account, seeing exactly left after paying rent for a tiny room, and realizing the mainstream advice about saving your pennies was a complete lie. I was so desperate to get rich that I bought into an unliquid alternative yield fund that a smooth-talking broker sold me, and when the market turned, they completely locked down redemptions. I couldn't get my own cash out to pay for a broken car transmission. I had to drive a beat-up new Honda Civic with a grinding gear for a whole year, and I couldn't even afford to buy a proper couch for my apartment. I slept and ate on a literal plastic lawn chair in my living room for months. That was my turning point. That was when I realized Wall Street exists to serve Wall Street. Not you. I stopped listening to the corporate suits. I liquidated that garbage, and I took absolute control of my own capital. I focused on scaling my high-income skills, maximized my savings rate to over and poured every single dollar into transparent, highly liquid index funds, like VOO plus elite dividend growth rocks, like SAG, and aggressive growth vehicles, like VUG, no hidden models, no locked-out redemptions, no corporate lies. Today, at 2 years old, my net worth has officially crossed and I did it by rejecting the exact same opaque garbage products that the elites are trying to trap you with right now. Now, do you want to hear something really funny about the central bank? You know what money printing actually is, right? It is when they create billions of dollars out of thin air to bail out their friends. It causes massive consumer inflation. But what do the elite people in power care if they are the ones that control the money printers? Right? So Kevin Warsh is currently trying to tell the media that he is going to do the exact opposite of money printing. Warsh is boldly saying that he is not going to print money. Rather, he is going to have the Federal Reserve start aggressively shrinking their balance sheet, which is the literal opposite of money printing. And to that blatant lie, I say, yeah, right? I mean, that is like saying that the federal government is going to magically balance their annual budget. That is like saying corrupt politicians are going to go to federal prison for insider trading. Like it is a complete fantasy. It is absolute financial fiction. In my professional opinion, as someone who has actually taken control of his own capital, I believe that Kevin Warsh is flat out lying to the public. Like, I don't see how the Federal Reserve is mathematically going to shrink their balance sheet and do the opposite of money printing when interest rates on skyrocketing government debt are hitting highly uncomfortable levels. The 10-year bond yield right now is sitting at a painful 5% as of Monday afternoon. You have the critical year Treasury yield screaming at 5% nil. Like, this is incredibly bad news for the banking system. The entire U.S. bond market is in deep trouble. And I just want to say good luck to Kevin Warsh trying to shrink the Federal Reserve's balance sheet in this type of toxic environment. So you have to understand that if Warsh and the Federal Reserve actually start shrinking the balance sheet, then what they are saying is that they are going to be dumping billions of dollars in U.S. treasuries into the open market, or letting them run off, and that forced selling is going to push interest rates even higher on U.S. treasuries. And that is going to cause interest rates to go up instantly on consumer mortgages, on student loans, on high-interest credit cards, on everyday auto loans, and on essential business loans. And the federal government, of course, they are going to have to pay much more in interest expense inside their already broken budget. So shrinking the balance sheet, yes, of course, it is going to cause massive economic damage to the working class. It is going to raise interest rates across the board. And of course, that is going to really upset President Trump, who wants easy money. So I just don't see realistically how Kevin Warsh is going to do the opposite of money printing, how he is honestly going to shrink the balance sheet. When right now, at this exact moment, the Federal Reserve is already quietly printing billions of dollars a month, and that doesn't even appear enough to stop the financial cracks from getting bigger. Now, I just want to address this because it appears that it is scaring a lot of retail investors into sitting on cash. So when you look out for the rest of the year, the market expectation is 0 interest rate cuts in Arting, and the very real possibility of 1 or 2 aggressive rate hikes. But here's the thing. How can they safely raise interest rates when the real economy is already suffering so much?